For decades, Japan stood by the United States, opening its markets, welcoming American troops, and investing billions into the U.S. economy. It was more than just a partnership. It was a quiet alliance built on trust. But something has changed. Behind the scenes, frustration in Tokyo is boiling over. Japan feels cornered, disrespected, and pushed to the edge. And what's happening now could send shockwaves through global trade, technology, and even the future of American jobs. This isn't a simple disagreement between two allies. It's the unraveling of a relationship that once helped shape the modern world. As tensions rise, Japan is starting to make moves that Washington never expected. The kind of moves that aren't shouted about, but calculated, quiet, and strategic. To understand where all this is heading, we need to go back to the beginning, to what brought these two powers together and what's now tearing them apart. For over 70 years, the United States and Japan built one of the most important partnerships in the modern world. After World War II, Japan became a key ally in Asia, supporting U.S. military presence, opening its markets to American companies, and aligning with Washington on trade, diplomacy, and technology. Japan allowed more than 50,000 U.S. troops to be stationed on its soil. In return, it believed it had earned a trusted place in America's strategy. This partnership helped shape the global economy. Japanese automakers, tech firms, and manufacturers expanded far beyond their borders, especially into the U.S., where companies like Toyota and Honda created tens of thousands of jobs. Japanese capital flowed into Wall Street. Billions were invested in American factories, energy projects, and real estate. In many ways, Japan helped build the U.S. economy from the inside. But now, things are shifting. The same country that Japan supported for decades is turning up the pressure. Under Trump's return to office in 2025, Washington is taking a far more aggressive stance, slapping tariffs on Japanese cars, interfering in Japan's trade with China, and applying behind-the-scenes pressure that feels less like cooperation and more like coercion. This sudden change didn't come out of nowhere. It's been building for years, through trade imbalances, technology rivalries, and the growing belief in Washington that Japan's rise came at America's expense. Now that pressure is threatening to break a bond once considered unshakable. And Japan, usually reserved on the world stage, is beginning to push back. When people think of Japan's role in the U.S. economy, they often picture cars, and for good reason. Japanese automakers like Toyota, Honda, Nissan, and Subaru have become pillars of the American auto industry. But they don't just ship cars to the U.S., they build them there. Right now, Japanese car companies operate more than 24 manufacturing plants across the United States, producing over 3.5 million vehicles each year. These are not imported goods. They are made by American workers in American towns using American parts. The numbers are hard to ignore. Japanese automakers support more than 900,000 American jobs, from assembly lines to suppliers to dealerships. In states like Kentucky, Alabama, and Indiana, entire local economies depend on these factories. In total, these workers earn over $100 billion a year and contribute nearly $35 billion in local, state, and federal taxes. And it's not just about employment. Japanese companies are among the top foreign investors in the U.S., pouring over $700 billion into American assets. From tech startups and research centers to real estate and clean energy. This economic web is deep and tightly woven. But all of this is now under threat. With tariffs of 25 to 30% on Japanese vehicles being considered by the Trump administration, those same companies are being treated as if they're hurting the American economy, when in fact, they've helped fuel it for decades. These tariffs wouldn't just raise car prices. They would shake the very foundation of towns built around Japanese factories. What's more, this economic strain is colliding with another rising conflict: Japan's role in the global tech supply chain. As pressure builds on multiple fronts, Tokyo is starting to reconsider where and with whom it does business. The alliance that once drove growth is now testing the limits of loyalty, and Japan is quietly preparing for a different kind of future. Japan is not the kind of country that reacts with loud threats or bold headlines. Its response to economic pressure is far more subtle, carefully measured and deeply strategic. While Washington escalates the tension with tariffs and demands, Tokyo has chosen a quieter path, moving its pieces behind the scenes. Take Nissan, for example. In early 2025, it quietly reduced production of its popular Rogue SUV at its Kyushu plant by over 13,000 units. This wasn't a supply chain issue. It was a calculated move to avoid exposing one of its core exports to fresh U.S. tariffs. Toyota followed a similar path, announcing new investments not in America but in Thailand, where it's expanding electric vehicle production. Over the past 2 years, Japanese automakers have been shifting more manufacturing into Southeast Asia. Countries like Vietnam, Indonesia, and the Philippines have become attractive alternatives, not only for their lower costs, but for their political neutrality in trade disputes. Mazda has invested over $150 million in Thai EV facilities, while Honda has announced new production lines in Malaysia and Vietnam. And then came a bigger surprise: Toyota's $2 billion deal to build an electric vehicle factory in Shanghai, deep inside China. For years, Japan kept a cautious distance from making major automotive investments in China, given the geopolitical risks. But confidence in the U.S. as a stable partner has faded. As a result, Tokyo is diversifying, not abandoning America outright, but steadily reducing its dependence. These are not panic moves. They're long-term shifts that Japanese companies had planned for since trade tensions began escalating in 2018. Now, with the pressure at a new high, they're simply executing those plans. And the impact will be felt gradually, model by model, job by job. What was once quiet loyalty is turning into quiet withdrawal. Meanwhile, another sector, far more sensitive than cars, is about to take center stage in this growing conflict. While car factories and tariffs dominate the headlines, a far more sensitive battle is unfolding behind closed doors, one that could shape the future of global technology. At the center of this conflict is Japan's semiconductor equipment industry. Companies like Tokyo Electron and Screen Holdings are world leaders in the machines used to produce advanced computer chips. These tools are essential, and few countries can make them. Right now, about 40 to 50% of Japan's chip equipment exports go to China, its second largest market after Taiwan. But the United States wants that to stop. Washington is pressuring Japan to restrict these exports, claiming that Chinese tech companies, especially Huawei, are secretly building dozens of new chip factories. A classified letter from the U.S. Congress, sent directly to Japan's ambassador, warned that Huawei is masking its involvement and could soon dominate older chip production used in cars, electronics, and even military gear. The U.S. argues that halting these sales won't hurt Japanese firms, pointing to stock gains and U.S. subsidies as support. But for Tokyo, it's not that simple. Cutting off a major buyer like China risks billions in sales at a time when Japan's economy is already under strain. What's unfolding isn't just a commercial dispute, it's a strategic power play. The U.S. is asking Japan to sacrifice economic interest for geopolitical goals. And now, with tariffs in one hand and tech demands in the other, Washington is forcing Tokyo into a corner. Japan now finds itself in a position it tried for years to avoid. Caught between two powerful rivals, each demanding loyalty. On one side is the United States, its closest security partner and longtime economic ally. On the other is China, its largest trading partner and a critical buyer of high-tech machinery, vehicles, and industrial goods. Choosing between them is not just difficult, it could reshape Japan's entire economic future. If Tokyo gives in to Washington's demands and blocks exports of chip-making machines to China, it risks losing access to a market that accounts for nearly half of its semiconductor equipment sales. These machines aren't easy to reroute to other buyers. They're custom-built, delivered through long-term contracts, and supported by local service networks. The economic loss wouldn't just hit a few companies, it could drag down one of Japan's few high-growth sectors. On the other hand, resisting U.S. pressure could trigger retaliation. Tariffs on Japanese vehicles are already being used as leverage, and more restrictions could follow. That's not just a threat to the auto industry. It's a message that economic dependence on the US has now become a vulnerability. In response, Japan is looking for room to breathe. It's deepening trade ties with Southeast Asia, accelerating cooperation with Europe, and expanding its role in regional agreements like the Comprehensive and Progressive Agreement for Trans-Pacific Partnership, CPTPP. But shifting trade takes time. The choices Japan makes now will have consequences that stretch across decades. As pressure builds on both sides, Tokyo is no longer playing the role of the obedient ally. It's calculating, hedging, and preparing for a future where it may need to stand more independently, economically and strategically. But with that comes risk. Because when trust breaks down between allies, the ripple effects are rarely contained. Japan's growing frustration isn't happening in isolation. It's being watched closely by US allies across Asia and beyond. Countries like South Korea, the Philippines, India, and even Australia are beginning to question the reliability of Washington's commitments. If Japan, one of America's most loyal and cooperative partners, can be pressured with tariffs and economic threats, what stops the same from happening to them? The damage goes beyond policy. It strikes at trust, the foundation of any alliance. For decades, the United States positioned itself as a dependable partner, one that protected allies in return for cooperation and open markets. But this new era of transactional diplomacy, where even close friends are treated like economic rivals, is shaking that image. And into that space steps China. While Washington uses tariffs and restrictions, Beijing is signing trade deals, expanding infrastructure projects, and deepening energy ties with countries across Asia, Africa, and Latin America. Nations that once leaned toward the US are now hedging their bets, accepting Chinese investment, reducing dollar reliance, and quietly preparing for a more multipolar world. Ironically, the tariffs meant to protect American workers are also starting to backfire. Many of the vehicles hit by these taxes are built in the US by American workers using supply chains that stretch across North America. Jobs in states like Mississippi, Alabama, and Indiana are now at risk, not because of foreign competition, but because of political decisions in Washington. The global fallout isn't just economic, it's strategic. When the US starts punishing its allies to gain short-term leverage, it weakens the very system that once gave it long-term strength. Other nations are watching how this plays out. And as the US pushes its allies away, China isn't just watching. It's moving in, offering partnerships with fewer conditions and longer timelines. That quiet shift in global power is already underway. Japan isn't making noise, but it is making moves. Over the past year, its biggest automakers have started to redraw the map of global production. Toyota, for example, is now expanding EV operations in Thailand, Indonesia, and Vietnam, while Mazda has committed over $150 million to build out new electric car plants in Southeast Asia. The real shock came when Toyota signed a $2 billion deal to build a major electric vehicle factory in Shanghai, something once considered too politically risky. And this shift isn't just about numbers. It's about trust, about how long a country is willing to be treated like a partner in name only. Japan is still listening, still watching, but its money is moving. And in geopolitics, that's what really speaks. The question now is whether this quiet drift becomes a permanent break. Because if Japan, the most loyal of allies, can be pushed to the edge, what signal does that send to others? What happens when countries like South Korea or India start to hedge their bets too? Will the US adjust course, or keep pushing until it stands alone? If you want to stay ahead of these global shifts, make sure you subscribe and turn on notifications, because the balance of power isn't just shifting, it's being rewritten.